Breaking news here crossing on OpenAI. More of it. Let's get to Christina Partsinevelos with details. Morning, Christina.
Good morning, Sarah. Well, tech giants are uniting to bring AI infrastructure to the Middle East. OpenAI, SoftBank, Oracle, Nvidia, and Cisco announcing right now the creation of UAE Stargate, which would be a 5-gigawatt AI computing campus in Abu Dhabi. It would actually be the first international deployment of Stargate, which is OpenAI's largest data center here in the United States, building in Texas. The campus, though, in the UAE will be built by Emirati firm G42, with 200 megawatts expected to go live in 2026 and operated by OpenAI as well as Oracle. The UAE will become the first country, according to the release, in the world to enable OpenAI's ChatGPT nationwide. Nvidia will be supplying its latest Grace Blackwell systems needed to run these large AI data centers, much like it announced with Saudi Arabia just a few weeks ago. But this Middle Eastern expansion really signals a notable policy shift from Washington. Until recently, companies like Nvidia, AMD required special U.S. licenses to export advanced technology to countries like the UAE or Saudi Arabia. Why? Because of concerns that the technology would eventually land in the hands of China. G42, the company operating this Abu Dhabi data center, did have close ties with China, but according to an American think tank, a CSIS report from just this past January, Emirati officials claim to be decoupling from China in AI. Notice they use the word claim, divesting Chinese investments and removing China-made equipment from its other data centers in the country. We're not expecting major stock reaction, perhaps just yet. I did break this news last Friday. We're getting it officially right now, and a lot of analysts just over the last 2 weeks have said that most of these Middle Eastern deals have been priced in, especially because they lack specific details on how many chips, the specific construction timeline, but nonetheless news for this hour. Guys?
The day following the AI chipmaker's quarterly earnings releases on May 28th, options traders monitored by Bloomberg forecast that Nvidia's shares might rise or fall by as much as 7.4%. The average 11.3% intraday trading fluctuation in Nvidia shares the day after earnings reporting over the previous 8 quarters is greater than the 7.4% number derived from Bloomberg consensus data. This indicates that, in contrast to the previous 8 quarters, options traders anticipate less volatility from Nvidia shares on May 29th. In February, Nvidia's stock dropped 8.5% after the company's fourth-quarter profits exceeded Wall Street's forecasts, but its first-quarter gross margin guidance was below expectations. In the range of 11.4%, shares of the chipmaker increased as much as 2.8% and decreased as much as 8.6% on the day following its results announcement. Although the range that options traders anticipate for the May 29th trading session suggests that Nvidia stock may gain up to 7.4% or lose up to 7.4%, it also suggests other possible outcomes. The stock might, for instance, rise as much as 5.4% and fall as much as 2%. Alternatively, it can increase by 3.4% and decrease by 4%. Investors have made significant profits by sticking onto their Nvidia shares, despite the fact that the company's shares have generally been volatile after the last 8 quarterly earnings announcements. Data gathered by Jared Blicker over the last 10 years shows that if shareholders purchase Nvidia stock prior to the company's earnings announcements and hold on to it for a full year, they have seen a median return of around 120%. Nvidia's May 28th results follow a tumultuous year for the stock due to China's AI advancements and the Trump administration's constantly shifting trade policy. After a new low-cost AI model from Chinese firm DeepSeek raised doubts about big tech's enormous spending on AI infrastructure and concerns about a slowdown in spending, Nvidia's shares struggled to begin 2025. Those concerns were heightened by indications of a possible slowdown in AI data center spending from Microsoft, one of Nvidia's largest clients. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Wait is almost over. Nvidia set to report its first quarter results on Wednesday, May 28th, after the market close. Here's what investors have their sights on. Let's get to Yahoo Finance's Dan Halley. Hey, Dan.
That's right, Maddie. We're expecting Nvidia to report earnings per share of 88 cents on revenue of 43.3 billion. And that would be a jump from 61 cents and 26 billion in Q1 last year. Now, Nvidia's shares have been kind of on a roller coaster since the start of the year. There's been issues related to export controls, the AI diffusion rules that the Biden administration had put in place before leaving office, fears over tariffs. But that seems to be kind of waning at this point. The Trump administration did away with the Biden AI diffusion rules, though they do say that they're going to put some other kind of regulation in place. They haven't kind of illustrated what that might be. The other thing is that they're allowing them to sell their chips to countries like Saudi Arabia, as well as the United Arab Emirates. We saw the news reports when Trump was in the Middle East that they'll be taking part in the Project Stargate in the UAE. And then in Saudi Arabia, they're expected to sell hundreds of thousands of GPUs over the next 5 years. So not exactly this year, but in the coming years. And as for Stargate, well, it depends on if that ever really kind of gets off the ground or not. There's been some funding stuff going on there with the U.S. project. But for NVIDIA, that's good news. Now, we did see Jensen Huang during Computex, the trade show in Taipei, Taiwan, criticizing the U.S.'s export rules, saying that they've been a failure so far, and basically that they're helping more or less Chinese companies build their own chips and kind of reach the ability that NVIDIA has to offer, or may reach the ability that NVIDIA has to offer when it comes to the power of their chips. So we'll see what that means for NVIDIA and the Trump administration, whether or not they'll ease export controls to China. There have been reports from Reuters that NVIDIA is working on a new chip that they would be allowed to sell into the Chinese market. You'll remember we're expecting a $5.5 billion charge that NVIDIA is going to have to write down based on the Trump administration's H20 rules. Basically, NVIDIA's H20 chip not being allowed to be sold in China is hitting NVIDIA's bottom line to a degree. So we're expected to see, obviously, healthy growth. It depends on what Wall Street, though, kind of is anticipating as far as, blow it out of the water, right? They had a beat and raise going for a while. The growth it's still going to be over 100% in some cases, but it's not the 200, 300% that we had seen. And after earnings, we've kind of seen investors pull back a little bit afterwards as a result of that. So I think it's about getting those expectations in line, and then really what we can see from Jensen and company as far as what they expect in the coming months with regards to regulation or tariffs. We know that the Trump administration is performing an investigation into whether or not they should have tariffs on semiconductors. So there's still a lot going on with regards to Washington and how that impacts NVIDIA. But for now, it still seems, though, the big tech companies, the Microsofts, Googles, Amazons, Metas, they're still on board with spending the billions of dollars that they said at the beginning of the year on their infrastructure. That's still in line. So NVIDIA is going to be the beneficiary of that for sure.
Just as NVIDIA's competition in the Chinese market from domestic tech firm Huawei heats up, the stock has also been severely damaged by President Trump's trade battle with China, his prohibition on exporting NVIDIA's specialized chips to the nation, and his threats of worldwide retaliatory tariffs. Ahead of the chipmaker's earnings announcement, shares have increased in recent weeks due to the U.S. temporary trade truce with China, NVIDIA's international business prospects, and Trump's revocation of a restrictive chip trade policy from the Biden administration. Although they anticipate that its growth will continue to slow, Wall Street analysts anticipate that NVIDIA will report record profits and revenue for its fiscal 2026 first quarter in April. In the first quarter, analysts predict that revenue will increase by more than 66% to $43 billion, and adjusted earnings per share will increase by 44% to $0.88. By contrast, NVIDIA reported a startling 262% increase in revenue and a 461% increase in earnings per share during the first quarter of last year. Next week's results will be eagerly watched by investors for indications of the effects of Trump's ban on NVIDIA's chip shipments to China, a move that CEO Jensen Huang claimed has lost the business $15 billion in sales. As equities hit a speed bump due to concerns about federal deficits pushing up Treasury yields, Wall Street will be watching an earnings report from semiconductor behemoth and artificial intelligence bellwether NVIDIA in the coming week. Following a wild run, U.S. stocks have retreated this week as investors focus on tax and spending proposals that could increase the nation's $36 trillion debt. Amid the fiscal concerns, long-dated U.S. Treasury yields increased. The 30-year yield surpassed 5% and reached its highest level since late 2023. The attention will turn to Nvidia's quarterly results on Wednesday. Nvidia is among the biggest firms in the world by market value, and its stock has a significant impact on benchmark equity indexes. Chuck Carlson, CEO of Horizon Investment Services, stated that everyone will be watching Nvidia's report. Nvidia is at the forefront of the AI topic, which has been a significant market driver. Of the magnificent 7 mega-cap tech and growth firms, Nvidia will be the final one to release its results for this time frame. After leading the market higher collectively over the previous 2 years, their equities have been mixed in 2025. After surging over 1,000% from late 2022 to the end of 2024, as its AI chip business drove enormous increases in sales and earnings, Nvidia's shares are down 1% this year. According to an LSEG poll, analysts anticipated that Nvidia's first quarter profitability increased by roughly 45% on revenue of $43.2 billion. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
With Stargate. So going global here, expanding in the UAE. What does this tell us and what does this say about OpenAI's global ambitions?
Sure. So Stargate UAE is just an extension of something we announced last week, OpenAI for countries. So think of it in 3 parts. Number 1, how do we deploy AI with our allies and with our partners around the globe? We recognize that whether it's breakthroughs in healthcare, personalized learning, areas like energy, innovation, they're not all going to happen in one place. So we want to make sure our technology is around the world to benefit people everywhere. Second, it is, of course, an infrastructure build. We will be putting a data center into the UAE, into Abu Dhabi. It's going to start with something around 200 megawatts and build up to about 1 gigawatt on their campus. That's a full 5 gig. And we're doing it with our partners, as you said, to make sure it's safe and secure. And then finally, it's the investment piece that I'm sure we're going to talk about.
What is it costing you? What do you have to spend on that?
So to build that data center in UAE, the kingdom itself is going to build that. So UAE plus G42, they will put that data center in place. Why would they do that? Well, I think countries and states are all recognizing that, first of all, those builds bring economic wealth to a region. They bring skills. There's going to be a skill gap if we don't get ahead of it on AI. And frankly, they set them up to be able to drive this technology into the arms of their populace. So remember, this region in about 2,000 miles, which is about the distance where latency still works well for our products, you reach about half the world's population.
Interesting.
Isn't that crazy?
Where are you in terms of ChatGPT numbers? What percentage right now of the world's population do you have using your device, or not devices yet, but your software at this point?
So the last numbers we gave were over 500 million were weekly active users. You can imagine our monthlies are even bigger. So we're starting to see a pretty staggering percentage of the world's population is using the technology. And that's all organic. Remember, we've done very little marketing to date. So this is people just finding the technology, recognizing that it can really change their life in small ways, like what am I going to make for dinner tonight, to really big ways. I mean, I use deep research every single day of my life to do things that a CFO needs to do.
You mentioned some of the partners on this. Oracle is a big one, also SoftBank. We don't really see Microsoft. Maybe they're more behind the scenes, but Oracle has been a big anchor of Stargate. Are they comfortable? Is Microsoft comfortable with you guys having closer partnerships with other cloud providers, given how much they've spent and invested in OpenAI?
I mean, yes, because they're an investor in OpenAI. I think recognizing just the scale that we're getting to, last year we really pushed on how do we build a much more diversified approach to our infrastructure build. It begins with Microsoft, a really core partner, but now we're working with folks like Oracle, CoreWeave, as you mentioned, and now shifting into a more global footprint. But Stargate will remain really the way we talk about our infrastructure. As you know, we were at the White House in January, I think, with President Trump. At that stage with Larry Ellison from Oracle, with Masa-san from SoftBank, and Sam, of course, talking about this first big push on $500 billion into Stargate here in the United States.
And maybe we're reading too much into Satya not being there and Larry Ellison being there.
No, I think on that, I think you're overreading. Remember, G42 itself, Microsoft is an investor in G42. And we continue, we will always be close partners with Microsoft, given the investment, the infrastructure they build for us, and of course the IP. When you buy the Azure OpenAI API, you are buying our technology.
According to Art Hogan, chief market strategist at B. Riley Wealth, Nvidia can send a powerful message about AI and how businesses' spending plans are doing after major tech companies earlier in the quarter indicated strong expenditure on AI. Nvidia has the ability to revive interest in that theme. According to Wasif Latif, chief investment officer at Sarmaya Partners, Nvidia is a popular choice for smaller retail shareholders and serves as a barometer of investor mood. According to Latif, a lot of people will be watching to see what happens with the stock because of its magnitude and the attention it is attracting. Nvidia's study may also highlight U.S.-China tensions. After the U.S. government restricted the business's shipments of its H-20 artificial intelligence technology to China, the company announced last month that it would incur $5.5 billion in costs. This year's stock market has been swayed by trade developments, particularly since U.S. President Donald Trump announced on April 2nd that he would impose worldwide import tariffs, which caused a sharp increase in asset prices. Since then, the U.S.-China truce and Trump's reduction of tariffs have contributed to the recovery of stocks. The benchmark S&P 500 index closed Thursday's trading session down less than 1% for 2025 and roughly 5% below its record high set in February. This week, investors turned their focus to the consequences of Trump's budgetary plans, particularly after Moody's cut the U.S. sovereign credit rating because of worries about the country's mounting debt load. A tax and spending measure that would implement most of Trump's agenda while increasing the national debt by an estimated $3.8 trillion over the next 10 years was narrowly approved by the Republican-controlled U.S. House of Representatives on Thursday. The U.S. Senate is scheduled to review the bill. In the midst of a sell-off, long-dated government bond yields have been increasing globally. Benchmark 10-year Treasury yields in the U.S. reached their highest level since February this week. Yields are inversely correlated with bond prices. Because they reflect greater borrowing costs for businesses and individuals, higher yields can make stocks less appealing while making fixed income assets comparatively more alluring. According to Horizons Carlson, the main worry from an investment perspective is that higher rates mean more competition for stocks. Where investors are placing their money will come under more and more pressure if interest rates keep rising. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investments.
It's now time to talk one of the biggest heavyweights in this market, and that is Nvidia today for FOMO. And it's always good to check in on the latest with Nvidia, as we tend to get headlines very frequently. Joining us now to talk more about some of the news that's impacting a nice 1.3% rise today is Diane King Hall, host of Morning Movers. So Diane, walk us through some of the latest, as of course this name is so critical to the overall market. It's no surprise to now see us firming up also in the four major averages.
Yeah, look, it looks like investors are in a buying mood ahead of results that we'll get from Nvidia in less than a week. And keep in mind, next week is a holiday-shortened trading week, so there's only essentially a few more trading days before we get those all-important results from Nvidia on May 28th. And analysts are starting to put out some of their views and adjusting some of their views ahead of those earnings. So the when is May 28th. The what is how will they do, especially when you think about those H-20 chips and the export controls that were placed on those. Those are the chips that were originally their stronghold in China, and they're now facing export bans there. In terms of what the expectation is going into results, and I'll talk a little bit about some of Jensen Huang's recent comments firing back about those export controls. So the expectation is for earnings to rise more than 40%, and revenue is expected to climb more than 60%. So there are some big hurdles to climb here. At the same time, and analysts are not expecting necessarily a big move in terms of the stock reaction, because in recent quarters, even when they beat and raise, you don't see a big move in recent quarters. So that's not the expectation going into this. TD Cowen says their view on Nvidia is they're still a top compute pick, but they talked about the fact that the earnings calls haven't been positive catalysts recently. Now, in terms of the H20 chips, the CEO Jensen Huang slamming the export controls, saying they've backfired in terms of the China AI development there. He calls the restrictions there a failure. He talked about the U.S. losing market share there and what he sees as a $50 billion AI market next year. And keep in mind, in terms of NVIDIA's footprint there, they had made up more than 90% there. And now with the export control, that's been significantly reduced there. Guys?
Diane, I love that you brought up the kind of lackluster performance around earnings. Not only has the day after the earnings event not been as exciting for NVIDIA investors, I think it's 2 up, 1 unchanged, or 2 down, 1 unchanged, and then 1 up over the last 4 quarters. But I extended that window a little bit. I just wanted to look the next week after earnings. We know that this is like an event for the market. It takes a little bit to digest. Down 10.6%. Down 7%, down 14.6%, the last 3 times 1 week after each one of its events. So a streak NVIDIA investors are hoping to break with this most recent one. You have the opportunity to talk to a lot of analysts and portfolio managers and traders there at the exchange on Wall Street. Is there still a sense that for this market to continue its ascent towards all-time high, is that a name like an Nvidia and the AI trade has to be the reason why?
So I'm not hearing that it has to be the reason why, but you can't discount it, obviously. So in terms of some of the expectations from analysts, Oppenheimer, Wedbush both see NVIDIA as outperform. They certainly still see upside from here. Both of those analysts and their analyst teams at both those companies still see more than 30% upside from here. They are expecting to see strong results from the most recent quarter, and there's expecting stability with the next quarter. They still think they're the best position within this space. For Wedbush, their view is that, you know, they think NVIDIA can lift sales enough to offset the loss of the H20 and the China business. And they said they're comfortable with where they see their consensus estimate for revenue for $43 billion. So Oppenheimer is saying that they expect both upside results and a roughly inline quarter for the July quarter, despite, again, the loss of the H20 sales. So even though they have lost those sales, they do think that NVIDIA is going to make up for it. But at the same time, it's interesting to see Jensen Huang pointing out that he thinks that the export controls are causing more harm than good.
Yeah, and I think that that's a great point there. And I think some of these analyst notes, and you see this like reaffirmation of the belief that AI will still have the same power it had in the back of this year, I think is huge. So NVIDIA with a decent move today, a relatively more quiet week, but definitely move to the upside nonetheless. So at least as we've seen at this noon hour, things tend to shift. We're still holding on to 1% gain in NVIDIA.